Hello everyone, this is Evan here from the Trade Risk on Friday, December 2nd with a weekend market recap video. We're going to be covering the current market environment, all of the major markets, sector analysis, and then finishing off with some individual names. If you like these videos, please do subscribe. Bottom right-hand corner keeps you up to date with all of the latest that we publish. We're going to jump right into things today. Let's start with the S&P 500. We're going to kick it off on the weekly time frame because this is Friday, the end of the week. S&P 500 SPY ETF closed down 83 basis points. That's a little less than 1% on the week, effectively giving back the progress that we made last week. If we take a look at the recent sort of weekly action here, here's a few things to keep in mind. One, we're coming back into the August highs that we broke out of just last week at 219.60. So you can see that we're retesting that level as of right now. Also keep in mind the run-up in November, that was about a 5% rally from these lows all the way up to recent highs here at all-time highs, about a 5% move. We've now given back almost 1% of that. So again, still a very minor sort of pullback, still constructive, and we're still hanging out here near all-time highs as the 8 and 20 sort of catch up. Still looks like a healthy kind of pullback environment to me based on that weekly chart. If we go to the IWM, even more so, from the lows from November all the way to these highs, almost a 15% straight line run up. This week we gave back 2.36%, but again, made 15% of progress, giving back 2.36%, still very healthy action. Effectively, once again, kind of reversed last week's progress. Now, the Qs, NASDAQ 100, this is where a little more pessimistic outlook here, although I'd argue that really nothing technically significant has happened in this market for multiple months now. We've effectively gone range bound here in between this 113 and 119.50 level for the past 3 or 4 months. So yes, we did fall from the top end of that range back to the midpoint towards the lower end, but that's what we've done for the past couple of months. So this market still is seeing some rotation, perhaps seeing a little disturbance here and just kind of figuring out what it wants to do. Again, that's the NASDAQ 100. If you were to look at the entire NASDAQ composite, we did break out last week to all-time highs. We now rejected those highs and came back. So a little bit, you know, you could look at this as a little more pessimistic too as you sort of look at the entire composite. But once again, we're still kind of hanging up you know, at the 8-period EMA on the weekly chart. So you just want to keep things in perspective. And again, it's going to depend on your time frame outlook, so on and so forth. So that is sort of the weekly picture of everything. Let's go back to the daily chart of the S&P 500. And you can see so far this recent consolidation pullback, whatever you want to name it, over the past 5 days, again, looks pretty healthy and orderly at this point. 219.60, if we start to really break below here, start to break below the 20 period, then we can start putting on some retracements here and start measuring, you know, just how far we're going to come back down and retest or sort of retrace the big sort of move in November. But for now, I think you can still remain relatively optimistic here, just given the size of the run-up we had in November and the mild pullback so far. Again, keyword so far. If next week we start unraveling and start accelerating lower, my tune will certainly change to a much more defensive or at least neutral positioning. For now, I think you can kind of still have one foot in the door looking for setups, trying to be long the market. That's what we're doing. You know, we did do a little bit of buying here on Friday, so we increased our exposure just a little bit, and we kind of have that one foot in the door, one foot out, trying to play kind of tactical in some names, but we want to be participating here on the long side, and we want to be getting in while this market begins to consolidate. Back to the IWM on the daily chart, once again here, healthy consolidation over the past 4 days. That can change. This could be more just the start to a more violent leg lower. I understand that, but until it happens, I just want to take what the market's giving me, and for now, this market looks like it's just consolidating in a way that I would prefer to see it after 15 consecutive days higher. And the Qs we sort of talked about there, dropping from the top end of the range back down to the lower end. Perhaps 113 is the date with destiny down here to retest the lower end there and see if support is still going to be support, and maybe shake out a few more a few more longs that are hanging in on some of these names. So that is the outlook there for the current market environment. Let's move into some of the other majors here. TLT getting a late week bounce. Saw a little bit of a hammer get printed on Thursday, still finished down 1.26%. Friday, we got that follow through to the upside. Again, still a very beaten, technically damaged chart right now, but it is overextended to the downside. It has seen kind of a historic move lower. So a little bit more of a bounce, perhaps up to these highs here at 122 to the 20 period, might be in the cards into next week. No position in it, was looking for a bounce, but didn't see anything too actionable there. So not in it myself, but looks like if you're going to play on the long side, you could be kind of tactical about it, and that may work out for you. If we go to the metals next, GLD, similar situation. Thursday, you kind of had that gap lower with a little bit of a reversal intraday. Friday saw the follow through higher. Same kind of comments here. Very sort of oversold, beaten up here for the past several weeks, for the past month of November essentially, and a bounce is sort of looks like a reasonably probable event to occur over the next at least start to the next week. Silver, we talked about sort of the resilience here in silver relative to gold as it kind of held these lows. It wasn't carving out lower lows and continuing to sort of waterfall lower. It was actually trying to stabilize and base out. That's healthy. You get a little bit of a move higher today again on silver as well, so might be a little more interesting, might get you a little more of a bounce here if we are going to get a sort of a wave of buying or rotation back into some of these metals. Going to oil, just ripped all week effectively, ever since Tuesday with this little island sort of reversal. It's been nothing but higher here. Closed the week on the highs. Very constructive weekly chart. Take a look here, coming back into the October highs. So, we got this pretty clear range that we're looking at. We're going to be interesting to see, can we actually follow through higher to here, or is this a okay, enough is enough rollover, and we're going to come back in and sort of play this game of ping pong for the rest of the year in USO. That'll be interesting to see how that all turns out. But so far, 2 consecutive gaps. There's a lot of momentum, chase, short covering, and it'd be tough to just want to jump in and fade it just because it's at these October highs. Need a little more of an actionable signal there, at least for my taste. UNG also continues to work. Friday, it saw a little bit of volatility here, kind of filled some gaps, probe lower, closed in the middle of Thursday's range, but still holding up, all things considered. Definitely a V-shaped rally off of these $7 lows, so tough to chase, tough to short, tough to get long. It's tough for everybody, it looks like, in UNG right now, but I'd rather be long it, but I don't see the real risk-adjusted way to get involved in that just yet, so for now, it's just a kind of wait and see for a better setup. Finally, the US dollar, let's just go there real quick. You can see starting to break down a little bit here on Friday, just after the kind of epic run higher that it's had. And again, that's certainly what helps out a lot of those commodities that we just talked about as the US dollar sort of cools off. Maybe it comes back in and, just puts in a little bit of a retracement, but a lot of strength there. It'd be tough to, tough to short such a strong market. But for now, there's some signs of cracking going on. Now, getting into some of the sector analysis, nothing's really changed on the upside. It's the same sectors we've been talking about. They continue to either plow higher or just stay resilient. IYT, right? This is one we've talked about for a while. Industrials, we've talked about this for a while. Financials, nothing new here. Friday, a little bit of weakness, notable, but on a relative basis, I mean, it's still kind of crushing out in front of everything else. And energy, certainly this week emerged as a nice leader as USO caught that real big rally throughout the week. So those are the 4 kind of standout top performers there for sectors. On the downside, let's talk about the bottom 4, semis, and this is mostly because they got hit pretty hard here on Thursday. Be interesting to see, is this finally kind of a day to take notice at which this, perpetual sort of uptrend of this year is now finally, really losing steam. We're going to start to consolidate for a longer term sort of in a longer term sort of way. It broke out to all-time highs here just this past couple of weeks, and you can see it quickly kind of got rejected based on Thursday's candle, and now it's kind of back in this range. So Friday, you can see got a nice bounce back. Maybe this is a one-day event. This this is sort of what we were talking about at the top of the episode here, is just to say, you know, are the Qs just was that a 2-day move? We're not going to get any more follow through in the last sort of shakeout here before we can see some rotation, or is it just the start to something bigger? That's what we need to really ask ourselves and think about going forward. But semis, a lot of these names really stretch the upside, a little bit of rotation, a little bit of a sell, some of these sell bars here, not the worst thing in the world, especially for those longer term players trying to get involved in. So semis, that leads the top 4 weakness there. XLK kind of goes hand in hand. Utilities got clobbered again this week, down 76 basis points, tried to get going, but then quickly gave that back. And then XLP staples. So really nothing has changed here. The bottom 4, top 4, besides maybe the semis. And again, I shouldn't even say that this is the weakest, in the bottom 4 sectors, because on a relative basis, and particularly this year, it's probably one of the biggest gainers. I just want to be very sort of short time frame, sort of analysis here on these semis to say that, they suffered a little bit of damage, particularly this week. So that is the sector rundown. Let's get into some of these individual names real quick. Microsoft, we don't usually talk about Microsoft, but I think we need to, just because for the NASDAQ 100 for big cap tech, this is still the most resilient that I'm seeing. Take a look here. It is still just, 1 or 2% away from all-time highs. It's very healthy relative to a lot of these other names. If the Qs start to get some rotation in here, I would expect Microsoft to be one of the first to kind of, rejuvenate and start to break out to all-time highs. So pay attention to that one. Apple, also pretty resilient here. You can see it is, got a little bit of a sell-off here. Wasn't immune to it, but not a whole lot of damage. Not coming all the way down to the November lows. It's actually kind of hanging up here. So I think if you want to be an Apple, that sort of momentum trigger can be 112. If it starts to break above 112, you could get that new leg higher back to these October highs. Amazon, this one's a little bit weaker, right? So this retracement, you can see already getting about 50% of the way there to these November lows. This is really kind of tough to jump on board here. You're really not seeing any reason to kind of step in on Amazon, perhaps down here closer to 700, 710. But for now, you kind of got this open gap. You have a double kind of top here, or whatever you want to call it. You got clear resistance up here, so kind of tough to get aboard here of Amazon. Just need a little more signs of stabilization. Facebook, very similar. In fact, we talked about in our mid-cap midweek video that this could turn into a potential inverted head and shoulders. Again, still not a high probability situation. Got the open gap, kind of had the rollover here. And in fact, that pattern did sort of fail, and we are back to retesting these November lows. So similar to Amazon, and perhaps even more so, Facebook does seem kind of heavy here, pretty weak. Again, if the bulls can defend this 115, 114 level, then that's a start to maybe build out some more solid support and springboard us higher. But for now, sort of tough to get involved in that, at least the way I look at it. Netflix is one that's more interesting. You can see kind of bucking the trend, up 3% here on Friday. It's been grinding higher in this channel. You could call it a bear flag based on this impulse move lower. And you still have this kind of glaring gap right here from earnings that's still open, never really got fully filled there. So be interesting to see if that kind of looming gap plays a role and maybe needs to get filled first before any more significant upside progress. But you can see in the longer term chart, we are at the top half of this big kind of range that Netflix has been in ever since topping out in 2015. So be interesting. I like the acceleration here, and on a little more strength, getting back up to here might be a good long candidate that I'd pay attention to. For now, I just want to see if these gains can hold on to it, can be held on to into next week. And finally, let's end it with Tesla. Tesla seeing a bit of weakness here. In fact, I think it got the lowest closed. Yeah, it did get basically, let's see, did it close below here? Well, if it did, it got basically the lowest close going back all the way to February of this year. So you can see it's kind of teetering on perhaps the lows that we made back on the 14th or so. And if it starts to lose this 180 a little more convincingly, you got to really sort of zoom out here. And this was the brief kind of false breakdown that we saw back in February, January, February of this year was the last time it was down there. And things were pretty accelerated as it started to move movement below and above those levels. So be interesting to see if Tesla can hold on to 180. I think it'll be a pretty important psychological one moving forward. And that's it. We'll end it there with Tesla. So as always, guys, thank you so much for listening to the video, and I will talk to you soon.